Hi, this is Randy Kirk, and the question of the day is, what the heck happened to Tesla stock in 2022? Well, there's been a whole bunch of folks talking out their hat about what happened to Tesla stock in 2022. A lot of them think it's all about the purchase of Twitter and Elon selling his stock and all of the comments that Elon has made. Is there a possibility that that had some impact? Absolutely. And if you look at the timing of the last leg down, you could say, yeah, that must have had some impact. I'll talk to that a little bit in this discussion, but I'm going to tell you right now, there's way bigger things at work than what has happened with Twitter and all of that mess. So I want to tell you that at the end, I'm going to talk to you about my Patreon setup. It's going to be very different than anybody else's Patreon. I think it's going to be really exciting and fun. So at the end, I want to tell you about what I'm doing with Patreon, and maybe you'll want to sign up and become part of my Patreon. But let's get right into the guts of this story. All right. So let's start with that Tesla has been what they call a story stock, or it has a narrative around it. And the story is that this is once in a lifetime, once in a generation, once in a millennium. I don't know. And it is. I mean, I believe, and I think you believe probably, that there has never been another company like Tesla in terms of its growth curve. There's never been another company like Tesla that has grown this fast after it's been this big. There's never been another company like Tesla that has been able to capture the imagination of so many people. And of course, there's never been another company like Tesla that's had so many haters out there. And why are there a bunch of haters? Well, I did a video on that. And there's a lot of people that are going to feel the competitive. Yeah, in other words, if you're in ICE car business, you might hate Tesla because your ICE cars are going away. So without getting into all that again, the truth is that this is like no other company that has ever been on the face of the earth. As some people say, it's like 12 startups. You have all these startups, and most of them have the potential to have $1 trillion market cap. So name me another company that has ever had 12 divisions that all have the potential to be worth billions, if not $1 trillion or more dollars. And a couple of the divisions, like the Robotaxi and Optimus Robot, have the potential to be $10 trillion of market cap. So, there's no other company like it. So the narrative has been there's no other company like it. And so that creates a lot of fear of missing out. That creates a lot of energy among the retail investors who want to be part of the mission. They want to follow on. Let's go get them. I want to be part of that. Then you also had a lot of people make a lot of money. You had a lot of Teslainaires, really, within 2 or 3 years, a lot of folks that might have had a net worth of 10,000 or 100,000 or 200,000 are all of a sudden worth $1 million or 2 million or 10 million. Or, a bunch of them are doing YouTube videos now that are worth multiple millions just from the Tesla stock run up. So all of these things contribute to the story. And when you've got a story stock, then that's going to cause, not only does it cause a huge amount of overreach on the high side, you'll see it also can contribute to this downside. So the story stock, if the narrative is all, firecrackers and love symbols, and then the story gets a kink in it, even if the kink is done by fudsters or the kink is done by people that are giving bad information because their future paycheck is at risk. It doesn't matter, because if the story starts to be hit, then the stock is going to be hit because the story is being hit. So that story, that narrative, if it shifts back, right now it's shifted low, right? Not because of Elon's comments. It's shifted low because there's a whole bunch of people out there giving the stock grief and talking about stuff that just isn't true. When you miss for 1 quarter, you're growing at 50% a year, and you miss for a quarter by a few thousand vehicles that might have been on ships, or they might have been in inventory, or and the stock goes down dramatically because of that, you know what's happening is the story, the narrative is not currently being bought. Okay. So the narrative is in trouble. If the narrative's in trouble, that's going to be one big reason why the stock is down. Number two, some of the early retail investors have gone rabbit. Okay. They're like, oh my gosh, I can't do this. Now, some of those people made a lot of money. They're on Twitter. They're not afraid to say it. They became Teslaonaires, and now they're like, I'm getting out. I'm taking my winnings and I'm going home. I'll put it in cash, or I'll put it in some other stock. So the retailers really helped it on the way up. You got a lot of retail investors, not very many institutional, lots of retail. And when those retail investors decide it's time to get out, well, we've seen it over and over and over again in the last 2 or 3 years, where the retail investors bail and the stock goes down dramatically. So that's part of what's going on. Back to the narrative for a minute. You have the whole EV narrative too. And now you've got a bunch of other EV companies that are in trouble, that are facing bankruptcy or could easily be headed that way. And so since their stocks have come down dramatically, that has a knock-on effect on Tesla as well. So that's part of the narrative, because Tesla is part of the EV narrative. So when you start to see softness in the entire EV space, then that also affects the narrative. Okay. Elon's stock sales would be one of the ones that had some effect, much more so than his comments, statements, or purchase of Twitter or any of that stuff. His actual sale, it wasn't the sale itself. It does reduce liquidity. Okay, so he's taking some money out of the system, just like when the retail investors go away. When Elon sells off a bunch of shares, then that takes some of the money out. So there's less demand for the available supply. And so obviously that's going to result in some amount of the stock dropping. But the overall fundamentals of the company haven't changed. So eventually, if the fundamentals are there, then that void will be filled. And it's a temporary situation. It just takes a while for other buyers to come in and fill that void. There's plenty of cash. I think I read just a few days ago that there's more cash on the sidelines right now than there was during COVID. So there you go. So there's huge amounts of cash available to jump into the marketplace. That's going to be important, of course, in 2023 for those of us who believe the stock's going to go to the moon. So that's just one thing is, yes, it had a temporary effect, but not a long-term effect when the ownership or when the insiders take money out. That's a short-term effect. The next one is right now, there's no new money coming in to offset these things, to offset the retailers and to offset Elon's sales. And there's no new money coming in because the market is down and the people are running scared. And so you have a risk-off environment, you have a fear-driven environment, and it hasn't gotten to the place where the greed takes over, where people go, oh my gosh, this is the best sale I've ever seen, it's time to buy, and the greed takes over, and all of a sudden the stock goes crazy. So we're at that point. I don't know, it might go down more. I can't believe that it's gone down this much. It sounds crazy to me that it's got this current valuation, but it could go down more because that wouldn't be any crazier than what's already happened. But at some point, it's going to hit a bottom, and we'll talk about it in a minute. Yes, so then Elon points out you can get 4%, 8%, 10%, even double digits worth of income from very low risk investments right now. So this is because the Fed has raised the interest rate faster than at any time in the history of the world. They've never raised interest rates this fast. Kathy Wood talks about this all the time. This is crazy. It just makes absolutely no sense unless you just want to slam the brakes on and hope the car doesn't skid right off at the cliff. So that's what's happened. I happen to believe that the Fed is going to wake up. I'm an optimist. I think they're going to wake up, maybe even in January, but certainly by February, they're going to get that it's time to at least go on pause. So that dramatic increase in interest rates has resulted in dramatic abilities to gain high amounts of income from very low risk investments. Well, when that happens, the stock market goes down. People are sitting, if they got money in cash, but they might have their money in treasuries at 5 or 6, I forget what it is right now, or they might have their money in some of these derivatives and other things that are at higher numbers, but still very, very, very low risk. Okay. Risk off mentality. So risk off, we commonly think of risk off in terms of go-go stocks, but risk off matters for all companies. Many of you who follow me know that I owned a plastics manufacturing business for a while. I thought it was going to be my retirement. I was forced to sell it in 2007. I got probably 20% of its value in 2027. That if I sold it in 2007, if I sold it in 2006, I probably would have gotten 5 times as much. In 2007, there were no buyers. I had 2 offers. It's a $5 million business. And a really good business. And I had two basic offers, one from India and one from the United States. And that was it over months. Those were the only 2 offers. And so when you only have 2 offers, obviously, you're not going to get that much. So that's what happens in this market. So companies are selling for 20%, 25%, 30%, some cases 50% of what they were worth a year ago. And it has nothing to do with their fundamentals. Their fundamentals are fine. It has to do with a risk-off mentality. So I would say that you could take about 50% of the 70% that Tesla is off is all just because of risk-off. That's my guess. Based on Amazon and Apple and some others, I think the Tesla story, it's about 50% of the total story. The rest of it is some of these other things. Over the last 2 weeks, you saw this leg down. This is the leg down because of, again, it's not because of all this other nonsense, all this other noise. You have people that are doing tax selling. If your portfolio, your Tesla stock is down by a massive amount, especially if it's a short-term investment, you can get out and you can take tax loss. As long as you don't get back into Tesla for 30 days, that's not tax advice. That's not IRS. It's not CPA advice. It is just true. Okay. If you get out of a stock, you have to wait 30 days before you can get back into it in order to capture that loss in that particular year. But there's plenty of people, I'm sure, that I considered it, quite frankly. I considered taking a tax loss this year and then rebuying in January. I decided not to. I'm still fully in. In fact, I decided to buy more. But the reality is a lot of tax loss selling going on these last 2 weeks. We know this to be a fact, but it just makes sense anyway. Then you have virtue. So you have some people that are selling because they're virtue signaling. So you saw what happened to Disney last year with the whole thing with their wokeness, okay? And you saw what happened to their stock. Nothing happened to Disney's fundamentals. Disney's fundamentals are fine. Their stock went down much more than the rest of the market. And I'm sure it was virtue signaling. It was people said, I don't want to be in that stock. Well, there's going to be a few people like that right now with Tesla. That's going to be the one thing where some of the commentary is going to affect people's decisions. I don't think it'll affect 1% of the population in terms of buying a car, but I do think it will affect more than 1% of people that make decisions with regard to stock purchases that may want to signal to the world, I'm not going to own that stock. So there's going to be a piece of that. Some of that's going to affect the stock price. Some of that will come back later. It will certainly come back later, as I said before, because any money that comes out that way, usually is going to be somebody else who's going to say, I want the bargain, and they'll get back in. Okay. Some fear of brand damage. There was just so much talk about brand damage that you have to believe that there were some folks that said, I'm going to take some of my risk off. Maybe they didn't sell everything, but they sold some. It's a perception thing. Obviously, brand is all about perception. Nobody knows whether it's hurt the brand. They can look at some stats and maybe think it has. Personally, I don't think it's going to be long-term, or even maybe it didn't happen at all. That's just me. And I'm a marketing guy, so I know something about brands. but it might. And it certainly affected, again, people who were buying the stock going, brand might be damaged. I'm going to take some of mine off the table. One of the things is, this is a big one. This is really big. Nobody else, well, I've seen maybe two other people say this, but it's really a big one. Tesla overshot on the way up by a lot because it's a story stock, okay? Nobody else went up the way Tesla did. We all were geniuses that year. We all made money. You could not make money on Tesla during that run-up. It was one of the most amazing run-ups in the history of the stock market. And it overshot because there was a lot of people piling on at the end. Yeah, I got to get in, I got to get in, I got to get in. When it overshoots that much, well, then the percentage down is going to look big. All right. So if it had only gone to $1 trillion in value and it was now worth 400 billion, that would have been a 60% drop. But since it was worth 125 at the top and now it's worth 4, now it's a 70% drop. So you can see what took place there. So if you want to compare apples and apples, look at Apple stock. Look what Apple did during that period in terms of going up, or Amazon or any of the other flyers. Look what they did in terms of going up and what they are now looking at in terms of coming down. And you'll see that a big piece of this, probably at least 10%, is that it was over the top at one end. And so now being as low as it is a 70% drop only because it was so high. I hope that made sense. Maybe I'll explain it again another day. Well, so then the macro right now looks to be in a capitulation. Or we could be looking at another leg down. It's always so hard to know which is taking place. But the macro is capitulating, so that is also creating another massive downstroke. Now, the last couple of days were good, are okay. Probably there's going to be a dead cat bounce, and maybe there's be another test of the current lows. Maybe it'll go down below those lows, depending on the news and whatnot. But overall, we should be in an area where consolidation is going to start taking place, and we started to see some big volume at the end of the year, but again, that could be tax loss selling. But we'll see maybe in the early parts of January whether this consolidation starts to build. All right. Here's a few things that we know. Gary Black and others are saying Tesla makes $7 a share, but they're not including anything for energy. Gary just today, as I'm recording this, just today added the Lathrop energy storage to his list of catalysts. Said that at the first quarter earnings report, there'll be a point at which the street gets that the energy thing at Lathrop is huge, and it's going to dramatically impact the value of Tesla going forward. I've been saying it, of course, for months. It's in the book. So this is not new. So Gary has just come out and agreed to that. We also have the IRA. Nobody's counting the IRA. So even if you take the $7 and you had $3 for Lathrop and $3 for the IRA, you're talking about, at that point, $13. I'm saying $15. It might be $19 if some of the other numbers are as good as I think they're going to be. But you figure it out for yourself, do your own homework, but that's what some things we do know. The IRA will have a huge impact on BEV sales, and Tesla sells almost all the BEVs in the United States, so it's going to impact them more than anybody else. And of course, ICE cars don't get the $7,500, so the competitive difference between ICE and BEV will be huge next year. That's got to hit me. There's no way, in other words, there's no way that Tesla doesn't sell 1 million cars in the United States next year from United States manufacturing. That part of it's in the bag. Berlin, 350,000. I think that's pretty easy. 1.2 million in Shanghai. That might be the more questionable one, except they can open up a bunch of new markets for export. They're already opening up new markets. They don't have South Africa. They don't have Argentina. They don't have India. There's a bunch of markets that they could go ahead and open up. Let's see, energy storage. We know about the energy storage situation. By the way, that is recession proof. It's almost all utilities and places that are not affected by recessions. And then here's the biggie. At some point, every recession ends. This recession will end. This is a recession that may or may not have started, depending on whose definition you're using. But this recession will end. Will it end in May? Will it end in next August? Elon has said he thinks it'll last into 2024. But the stock market usually predicts the end of the recession by about 6 months. So don't be a bottom picker. That's not investment advice. That's just Randy advice. Don't try to be a bottom picker. My whole way of looking at this situation is, what's the downside risk and what's the upside potential? Right now, the downside risk on Tesla and the downside risk on the market as a whole seems to me to be extremely small percentage. But the upside potential, once the market turns, looks to me to be huge. So there's my story with regard to why Tesla stock is gone horrible this year and some ideas about where it'll turn and when it'll turn. Let's talk about Patreon. Okay. Most people that put Patreon up, they put up some numbers, some projections, some expectations. They put them up early and then they tell the rest of the world in a few days. A lot of other people put their videos up a couple of days early and then they put them out for YouTube or whatever. And some people, Stephen Mark Ryan, for instance, puts up a lot of videos that are only available to Patreon people. Well, I'm going to do a completely different thing, and I think it's going to be a lot of fun. I'm going to do some of all those other things. Okay, I'm going to put the videos up sometimes 2 days early, sometimes a day early, a lot, but all of them will be up early. But then they're going to go on YouTube. What I want to do is I want to get in a dialogue with you. As you can tell, I hope I'm a outside the box thinker. I try to analyze and see things a little differently, and then provide some theories about what's going to happen in the future that maybe other people just aren't getting, like Lathrop, like the Optimus robot, which I'm going to do another video on shortly. But I want to be able to put that stuff up early with you guys, with these Patreon members, and have them kick it around. Yeah, Randy, that's crazy. What are you talking about? Well, what about this? Or, let's have a brainstorming session where I'll put up a video or I'll put up an article, and you guys can shoot messages back and forth or whatever, even phone calls. I mean, I want to get into a real dialogue about some of these ideas before I go public with them. And this will also give you the advantage of knowing about this stuff way before anybody else does. So right now we're at $5 a month. That's the most you can possibly spend on my Patreon. Oh, I think it's the least also. But anyway, but what I'm going to do is I'm going to grandfather that in. If you jump in now at $5 a month and you don't jump out ever, it doesn't matter if I go to $100 a month, you'll always be grandfathered in at $5. So that's what I'm going to do on Patreon. I think it'll be a lot of fun, and I'd love to have you along. And there's a couple of other things that I'm going to be doing with regard to the next book that I think you'll also find to be really, really interesting. So my Patreon information is down below in the comments. In the description. Some of the other related information is down in the description as well. So, hey, it's been great talking to you.
Click the link below to get your paperback, Kindle, or audiobook now.